Hey everybody, Marty Missouri. Good morning, October 20th, 2018. Thought I'd mix it up this week, and instead of writing a long weekly message for you, that I would just do a quick video. Of course, you'll get plenty more during the week as things evolve and as news headlines hit. Our goal here is to always help you keep the noise, or what is often just noise, in its proper perspective. The chart you have in front of you should look familiar if you've been with me on the blog over the last week. I ran this the 17th. The market had bounced pretty nicely. It was an 800-point day. It was on the 16th. I expressed my skepticism about the possibility that that would be the end of it and that the market would continue to rally for a variety of reasons. I expressed my view of unbalanced volume, and it was giving me a picture then that said not much conviction in either direction. And when it's looked like this in the past, the nice big rally off of a big dip hasn't held, and it was retested a time or three as we went forward. Except for this one example, we just had a shot higher, which means there was a lot of volume here, and it was all in one direction as we had a series of up days. In here, we had a bounce, but it was on relatively small volume, and then the subsequent down day was actually a big volume day. So that said that the sellers had more passion than the buyers. So when we fast forward to the current, sure enough, this down move in here was met with some pretty heavy volume, which says, on balance, when you look at this move off the bottom, the sellers have had more conviction, more passion than have the buyers. And you can see we were up 100 points or so on Friday, but on relatively average volume. So again, we haven't tested this bold yellow line here yet, but the unbalanced volume, when I compare it to other periods this year, suggests that a test is coming. Doesn't mean it is, doesn't mean we won't get some good news, might get some great news on trade negotiations, and then we probably wouldn't test this level at least anytime soon. But all things being equal, if there's no big change in the news and if the earnings forecasts continue to express concerns over a variety of factors, then we would expect this market to come down and at a minimum test this level. If this negative volume picture keeps up, we could easily blow through that and test a lower level when we look at things from a technical perspective. So in closing, folks, let's just, again, put all this in perspective. Sure, we may come and test this level, maybe lower. Right now we're mid-single digits. I said when this began that what made sense to me was a mid-single digit pullback to a low double-digit correction. Right now it's that mid-single digit pullback. The unbalanced volume and other indicators suggest that, yeah, there's definitely a chance that it could get worse before it gets better. But understand that if this is anything but unusual, just this year alone, I've circled 5 periods, including this one, where we had the kind of sell-offs that really got people's attention. In fact, you could probably argue that was one in here as well. And it's also very normal that you don't make it on the first bounce and start, moving back up to new all-time highs. Sometimes it takes some time. Sometimes it takes a matter of weeks before we get through this kind of stuff. Here we had a big bounce, looked like we were coming out of it, came down and really tested that again. I could draw one big circle right here. That was well over a month before we were off to new all-time highs. So folks, that's the nature of the market. Our job is to, first and foremost, as we manage portfolios, make sure that our allocation is consistent with what we think the fundamental backdrop offers. When that changes and when it offers up odds that suggest a recession is coming, then our allocation is going to change quite notably to accommodate for those conditions. Right now, conditions remain relatively bullish and favor a continued expansion. Not as good as they were at the beginning of the year, paying very close attention to it. But right now, we are allowing this volatility to continue without making any major shifts within client portfolios. And the current picture tells us to expect more of the same for a while. Thank you, folks, as always, for watching and listening. And of course, there'll be much more on the blog for you in the days to come. Take care. Have a great weekend.